Good morning, everybody, and welcome to CertaPay's Coffee Break. We are so excited to have you with us today. I am here with some members of CertaPay's HR consulting team. Cindy Merkel is our moderator, and I am Rachel Camella, your host today. And I am drinking a fantastic Elvis Rafael. It is a single origin espresso from Peru, and it is delicious. I hope you guys all have a good coffee to enjoy this morning because we have a lot to cover. So, Cindy, what kind of coffee do you have?
I have a dark roast with 2 shots of espresso.
Yum. Gotta love that. Okay, guys, so why are we here today? We are talking about the PPP Flexibility Act and your loan forgiveness. How do you get the most out of it? How do you deal with all these changes? What do we do now? The easy form, the revised form, the old form. We're going to cover it all. And I want to remind you that is as of right now. I think there might be changes again, but as of right now, this is what we know. So here we go. Let's see what we've got. I want to just do a quick overview of the loan. If you're on this call, you most likely got the loan and have been using the loan dollars and are trying to figure out how to get the most forgiven. So just a quick recap here. The PPP is a loan. That is the first piece of it. And I did have somebody ask, where do we put it on the balance sheet? And once it's forgiven, you're probably going to code it as other income. And if any portion isn't forgiven, then that's most likely going to be long-term liability. But that's a conversation for your accountant or your CPA firm just to kind of make sure you have everything in the correct columns on your balance sheet. It applies to employers under 500 per location. Your loan dollars were based on an average of 2.5 months of payroll. And we were told that you have to spend it in an 8-week window, and now that's expanded to 24. And there's a wiggle room there on the starting point in case your payroll cycle doesn't fall in line with the 8 weeks. They're not really saying you need wiggle room on the 24 weeks because your wiggle room is the amount of time you have. But if you are going to go with the 8-week forgiveness window, then you might have an alternative period, and that's because your payroll cycle starts a couple days later than when you actually got your loan disbursement. If you received money before June 5th, then you can choose. Do you want to use the 8 weeks or do you want to use the 24 weeks? It's totally up to you. But if you got your first disbursement payment after June 5th, then you have to use the 24-week window. You can get all of your loan dollars forgiven if you use them properly. So that's our big if. And a lot of this we went over. Not much of that has changed. So let's kind of recap. It can be really simple. It can be as simple as make sure it's all eligible expenses, keep your employee headcount up or return it back, restore it to where it was before, keep the wages of each individual employee up or return them back up quickly to where they were before. Don't forget to apply for forgiveness and document everything so you can prove how you spent it. Keep your head count up. That is right. All right. And again, a quick reminder, please mute your phones as you join in. I'm going to go through and mute a couple of you in case we missed it, but please mute your phones to help us out with that. Okay, let's keep going. Keeping your head count up is a very big reminder. So taking a look, the eligible expenses, we've got that 56 days or the 168 days. So I want to specifically speak to that. When you talk about that window of time, it isn't 2 months or 6 months. It's the exact number of days, 8 weeks times 7 days in a week. Those are your numbers. So make sure that you understand that. Don't just add up months at a time because it could be off by a couple of days and that could end up costing you money. So pay attention to that. If you have a semi-monthly or monthly pay cycle, you cannot change to an alternate cycle. You can only do that if you have a bi-weekly or a weekly pay cycle. Okay, so that if you're looking at that 8-week window for your covered time period, you can only shift it by a couple of days if you are bi-weekly or weekly. Now, the payroll cost, it was 75-25, payroll versus non-payroll, and now it's shifted to 60%, 40%. So in that 60%, it's payroll costs, salaries, wages, commissions, tips, bonuses, all of those pieces that are just basic payroll numbers. And then in addition, benefits, vacation pay, sick pay, retirement, all of those kinds of things. A couple caveats there. If somebody is out on FFCRA or they're getting the sick pay or the expanded family leave pay under the FFCRA plan, then those dollars cannot count under your forgiveness dollars and vice versa. You can only count them in one place. You know, there's been quite a stress about double dipping. Be very careful about double dipping, and this is one of those places. So if you've got all your payroll costs in here and you're counting them all toward your forgiveness, but you had a couple of employees who were out on that expanded FMLA leave with pay or under the sick leave as a result of COVID-19, where those dollars would be credited against your 941 quarterly return, then you can only claim those dollars in one of those places, not in both. So be careful about that. The other thing, yeah.
Rachel, can you clarify, can they physically use the PPP money to fund that portion of their payroll, but they just have to back it out at the end?
You can use the dollars to fund that and then claim it for forgiveness without backing it out. If you have somebody out on leave and you want to use the FFCRA dollars for that, then you need to carve that person and the wages out of the PPP. You cannot use them in both places. So that's what I'm saying. Be very careful about it. And what we've recommended to some of our clients is just use your PPP dollars, pay the individual the wages, and don't count it against your FFCRA. And then cross that bridge later if they need to use FFCRA later when you're outside of your loan window, so that you have no question. You don't have to backtrack. You don't have to do anything. Just keep everything in a nice streamline. And the other thing I wanted to talk about here is healthcare premiums for owners. This is something else that cannot be counted in your forgiveness numbers. The tricky thing here is you were permitted to use those numbers to get your loan on the front side. So this is something that changed. On the back side now, when you're going for forgiveness, you're going to carve out premiums that are healthcare premiums that you are paying for owners, for yourselves as owners or for owners in your companies. Healthcare premiums paid for those owners are carved out. And even though you used those numbers on the front side for receiving your loan total and calculating your loan total. Just a little piece there. The idea is that there's so much more available that is eligible expenses, so that piece is considered to be included in their wages, so it comes out on the forgiveness side. And also part of your payroll costs are the state and local tax compensation. This is something that is under your payroll costs for eligible expenses in that 60% number. So what I want to talk about here is the payroll taxes. Your federal payroll taxes and Social Security are not forgivable items. And one of the changes under the Flexibility Act is that you now can use the tax deferral program completely. There were limitations before where you could only do the tax deferral up until you receive your forgiveness, and that has changed. You can now participate completely in the tax deferral program. And so that means you can defer your 941 Social Security taxes until 50%, hang on, I gotta mute some people. 50% by for the end of 2021, and the remaining 50% for the end of 2022. So another little change there. That's a nice benefit. If you need to do that, you can. And then, of course, your 40% non-payroll costs. This would be mortgage interest payments, rent payments, utility payments. Those kinds of things can be spent 60-40. So what I want to say about this 60% is your 60% payroll cost drives your total. So that means if you get your payroll, if you get your amount, you can see my example here. The 60% will always be measured to see how much you spent on payroll dollars. If you spend less than that on payroll costs, then your total forgiveness will actually be adjusted down to match the 60%. So I put this formula here, the example, that is your payroll cost divided by 0.6 for 60%, and that would be your new max of forgivable. So let's say your loan amount was $100,000, but you only spent $50,000 on payroll costs. You would divide it, you would take your $50,000 divided by 0.6, and that tells you the total, having 60% of payroll being $50,000 would be $83,000. So that would now be the max you could get forgiven. So be very careful. Even though they've adjusted this number considerably, you still want to spend as much as you can on payroll costs to make sure you get as much as possible forgiven. All right, good. We doing good, Cindy?
Yes, ma'am. I've got everything. Keep going.
Okay, so going to the head count. Again, I talk about this as one of our very important points, and that's because this will still reduce your total. Counting the FTEs, counting the head count, all of those pieces that we talked about before are still the same. And so what do? When you calculate your full-time equivalent or FTE number, and this is not talking about the way we did our ACA reporting a couple years ago, just kind of put that on the back burner now. When we talk about FTEs right now for PPP, we're talking about a full-time person at 40 hours or more. So that full-time person at 40 hours or more counts as one. Anybody who works less hours than 40 in a week counts as a 0.5. So you can add up all the hours that your employees worked, divide by 40 and get your number like that, or you can just go down the line and count, your full-times and salaries as a 1, 1, 1, 1, and then anybody less than that as a 0.5, and add up your numbers like that. The important thing is to use the same format for your covered period as you use for your eligible period or the comparing period. So your eligible period is whatever you're going to compare against from either last year or the beginning of this year, pre-pandemic. And then your covered period, that's now. That's your 8 weeks or your 24 weeks. That's your covered period. So however you are going to calculate your FTEs, your full-time equivalent, use the same method for both to help you get to that number to compare. And in order to get the most forgiveness back, you want to have that same number. And the good thing about the way they've made some of the changes is they've really expanded. When they talk about safe harbor, they've expanded some of the things that will be exceptions for you if you couldn't get your head count up. So let's dig into that a little bit. So if I had 25 employees last year at this time, or the beginning of this year, January and February, during my eligible period, and now I'm in the covered period, I only got 20 back to work. Then based on this, just saying that I had 25 before and I have 25 now, I have to figure out my reduction quotient. And so this is that line 13 number on our form that we talked about before. So the reduction quotient is your FTE employees now divided by your FTE employees before. If it's anything at all less than 1, if it is a 0.95, a 0.92, 0.8, whatever these numbers are, they will dramatically impact the amount you can get back. So if you look at this example on the screen, just this little bit, I have 20 employees now. That makes my forgiveness reduction quotient 0.8. So now I take my loan amount, that was 100,000, and I multiply it by that quotient. The max I can get back now is only 80,000, regardless of everything else, because I didn't get all of the people back. Now, instead of having until the end of June to restore your numbers, we've got until the end of the year. So that means don't apply until you have all of your numbers back, because when you do this form, it's based on when you apply. Did you get all of your employees back? Well, not based on when you apply, but based on any time in your covered period through the end of the year. So if you didn't get all of your employees back, wait until you do, and then do your application. That will make a big difference in your forgivable amount. And then the other thing is the employees won't count against you who elected not to return. So you sent them an offer letter, you told them we're open, we're operating, we need you back, and they said, no, we're not coming back for one reason or another. Those count as an exception. So you can count on the exception form however many of those employees. Let's say I have these 20 employees and 5 people that I offered a job to did not come back. Then I count 5 under my exception. So now I'm 25 and 25. My reduction quotient is 1 and therefore doesn't reduce it. So let's say I have an employee who I offer a job to and he elects not to come back, but I am able to hire a new person to fill that person's place. I can't count that person as one of my exceptions. If you refilled the spot with somebody else, then the exception doesn't apply. The exception applies if the person doesn't come back and you don't fill it. So again, that speaks to the double dipping. So be careful about that. Are we good on keeping your head count up?
I'm good. Keep going.
So keeping your wages up is also one of the main pieces that can affect your forgiveness number, and this is wages per employee. So each employee is calculated separately, and if you took a look at the Schedule A worksheet, you see that list. We're going to drill down on that in just a minute, but you're accounting for each employee's wages on a separate basis, line by line. So the wages can't dip below that 75% number. If they're reduced more than 25% for an individual employee, then you're going to actually calculate the difference between how far they dipped and up to that 25% number, not up to the 100% number, but up to that 25% number. So let's say you reduced somebody's wages by 30%, then you would have to account for the 5% difference in your wage reduction number. So that's important, and those dollars do add up. They're subtracted right off of your loan amount. So keep an eye on that. If you know you did have to reduce some wages, get them back up to where they were as soon as you can. And that way you can check this box off so that you know you have that in line. Now, here's another question that I've gotten quite a bit is now that we've got a 24-week window, what if I spent all my money around the 16th week? Can I go ahead and apply? So yes, you can. There's nothing that says you can't apply early. However, you want to be very careful because the wages is something that will very specifically be looked at. If you had all of your wages up at the same level as you had pre-pandemic, you will be okay. But if you didn't, let's say you had somebody whose wages were reduced by 50%, and you're at the 16-week mark, they're not going to calculate the difference in those weeks. They will calculate the difference in the entire 24-week period and subtract that against you. So if you feel that you're safe to do something like this, take a look at your wage number first. And if you have dips in that number, then be careful. Get those wage numbers up as high as you can without a reduction for the entire period, or be able to show that it's up before you do something like that. Okay, so on to the exciting thing that you've all been waiting for, and that is which form is right for you. So the old form that we talked about last time is totally gone. You will not use that form at all. And unless you've already applied and turned it in, of course, this doesn't apply to you at all. But those forms are out the window. We now have two new forms. We have the revised loan forgiveness application, and we have our 3508EZ. The 30, and it's basically what they did to make this revised and simplified is carve out the forms from the instructions. And then on our 3508EZ, they just used the first page of the forgiveness application and put the instructions separate. So it's kind of easier. Let's take a look at the EZ first. So on the EZ form, the first thing you're going to do is ask if one of these three situations applies to you. And the other thing is you can use either form. If you qualify for the EZ but use the other form, that's perfectly fine, but not the other way around. If you don't qualify for the EZ, you have to use the other form. So one of these things you must be able to answer yes to. Either you're self-employed, independent contractor, sole proprietor, you have no employees. Even if you're an S-Corp, but you only have one employee and it's you, and as long as you have even one employee, then you're not saying yes to this top one. You would look at the next two down. So if you answer yes to this, you can probably use the EZ. If you answer yes to this one, you did not reduce your wages more than 25%, and you did not reduce your FTEs at all. So your FTEs are the same number, and your wages are not reduced more than 25%, then you've got a yes here. You can do the EZ. The third scenario is you did not reduce your wages for any employee more than 25%, and you were unable to operate at the same level. So you were forced to close, you were a restaurant who could not operate at full capacity, you are a hair salon that was closed for several weeks for social distancing, compliance, whatever the reason is. You did not reduce wages for any employee more than 25%, and you were not able to operate at your normal capacity, you can do the EZ. All right, so like I said, with the EZ, this one is separated out. You have your top section, which is the instructions, and then these, what I have listed on the bottom is the actual application. With the instructions, the very first thing you're going to do is that checklist, is ask one of these three questions. And then, which if you are able to answer yes to one of those, you're going to check that box in that form and then keep it for your records. And the other thing is you are going to keep any documentation that proves you are able to answer yes to one of those things. So while you might be saying, okay, I have the same number of employees, I didn't reduce wages, okay, I can do the EZ. Well, you still need to prove that. You still need to have a report showing the employee FTE count during the eligible time period from before and the covered period of now. You want to either use the form from the worksheet or create one. CertaPay has some great reports that work for these, and we've created them specifically so that you can track the FTEs before and now. So even though they're telling you you don't have to do all this for the application, you still have to be able to prove it. These will be documents that your lender may ask you to turn in, or they may ask you just to keep. But these will be documents that you will have to prove you were able to select that box. And then when we look at the actual form, it's really one page, super simple. It's going to ask total numbers, and then you're going to have your acknowledgments and signatures. Page 3 of that form is a demographic form that's optional. So taking a closer look, when you look at this form, the top half of this is the same exactly on both the EZ and the regular application. General information, how much was your loan? Did you get the EIDL advance? What is your payroll cycle? Are you shifting to a covered cycle, an alternative period, blah, blah, blah. This is all the same on both, general information. And then we get into the good stuff down here. And I'm going to zoom in for you. So this is what we have on our easy payroll costs. Well, you can run those reports easy. Your mortgage interest, rent payments, business utilities. So boom, boom, boom. These are all of your payroll costs that are payroll, all of your eligible costs, payroll and non-payroll. And then that's line 5. So like we talked about before, lines 5, 6, and 7 are going to determine how much you can get back. So you're going to add up all of the costs that you spent. That's line 5. And over the course of 24 weeks, chances are that's going to be higher than the actual loan amount you got. Line 6, that's your actual loan amount. And then line 7, that's the test against the 60%. And so what you're going to do is take your line 1 number, your total payroll costs, and then divide by that 0.6 to test that 60% ratio and see if you spent that number right. In our example, you remember we tested it against 50,000 in payroll costs, and so it wasn't the full loan amount, so that would be an issue. And then the lowest number of these 3 scenarios will be how much your maximum forgiveness will be. Pretty simple. Now, let's say you were not able to answer yes to one of those easy scenarios. So we're going to go to the regular loan forgiveness application. And this one was 11 pages, and in their reduced simplified version, it went to 12 pages. So I don't know, go figure. All they did was carve out all of the instructions and put them together in one document and put the forms separated in another. I guess that's simpler. So we have the instructions and definitions, and then we have our instructions for Schedule A, instructions for the worksheet, and the list of documents to keep and submit. Simple. So then we look at our actual application form. And same as the other ones, page 1 and 2. Page 1 is all of the totals and information. Page 2 is the acknowledgments and signatures. And we're going to take a look at that in a second. And then you have the PPP Schedule A. This is another form that you're going to turn in to your lender. And then you have the PPP Schedule A worksheet. And this is your FTE grid, your wages grid, reduced wages, FTE exceptions. All of these are on the worksheet. And like I said in our last show, we did the worksheet numbers feed into the Schedule A, and the Schedule A numbers feed into your forgiveness calculation form. And then the demographic is your last page there, and that is an optional form if you would like to fill that out and turn it in. So the Schedule A worksheet, this same thing, this is a great form. You can use this form as is. If you have a handful of employees, you might want to recreate this in Excel or in some other format. Like I said, CertaPay has created reports from payroll data that exactly match this worksheet and make it easy. You've got the information here, your compensation in box 1, the average FTE count in box 2, the reduction in box 3. And then this lower table is for your folks who are over 100,000 in annual salary. And then I want to bring your attention to this reduction exception field right here for your FTEs. This is where you're going to put employees where you offered them a position, but they did not return and you did not replace them. So they will just count however many there are. You add that in right here. And then your box 2 total will be all of your employees factored in, whether they're a 1 or a 0.5, and then plus any of your exceptions that you would have in here, and you would go from there. It will be important for you to keep some backup documentation for these exceptions. You can't just make numbers up and put them in there, please. If you have offer letters that you send to people, if you have a screenshot of somebody declining to come back, or if you have a document that somebody provided where they're not coming back, or you can simply mark on there, employee never contacted me again, whatever it is, you want to have some backup that you tried, whatever that looks like. Offer letters, phone calls, you're trying to get your employees back and they are not returning. And then you get your totals, and these feed straight into the PPP Schedule A. Right here, you can see box 1, that's from the worksheet, box 2, box 3. This information, you just carry it right over to fill in these fields. And then you do your other totals here, your health insurance premiums. Don't forget to carve out your owners. And then your anything from the retirement plan, your state and local taxes, plug in those numbers there, owner compensation down here, and then you're totaling everything up. All of those wages you're going to total right here. Payroll costs are line 10. And then you have your FTE number. I talked about that reduction quotient, which is line 13. That's this number here on the bottom. So if you did not return all of your employees, let's say our 20 and our 25 example from earlier, then your line 13 quotient reduction goes right here, that 0.8. And all of that is explained. And then if you didn't reduce anyone, then you check the box, you put a 1 in 13, and you skip 11 and 12 and just keep moving on. And then that brings us to the first page of the loan forgiveness calculation form. Same thing, like I said, this whole top half is the same. Regular information, you know, this hasn't changed. And then down here, you can see the difference. This line 5, 6, and 7, these are the lines that are not in the easy form. So because you checked that your wages are the same and your employee headcount, your FTEs are the same. So this is what's missing on the easy form. So now that takes us down here. You're going to populate this is from line 10, and then you're going to add your mortgage interest, lease or rent payments, utilities, and then this is where you're going to put that FTE reduction quotient, anything here, your salary reduction. And now we look at the 3 potential forgiveness amounts, 8, 9, and 10. And these are the same as that 5, 6, and 7 on the easy form. So you have your modified total on your potential forgiveness. So this is factoring in wage reductions and quotient reductions. And so that's the modified total of what you would be allowed to get forgiven. And then line 9 is your loan amount. And then line 10 is testing against the 60%. So easy. You fill in those 3 and then you pick the lowest one. That is your maximum for forgiveness. Super easy. I know you're all getting it now. So just in case, I did a couple of examples. These are made up numbers. I just created a scenario and then did the math for lines 8, 9, and 10 to see how it would look. So let's take a quick look. You received $100,000 in the loan. During the 8 weeks, you spent $68,000 on payroll costs and $22,000 on non-payroll costs. You have a 0.8 FTE reduction. So this is the same example as earlier, our 20 now, 25 before. That gave us an FTE reduction quotient of 0.8. So we would fill in, and I put in the form right here next to it, just so we can show side by side. Line 8 would be your eligible payments times your reduction, 0.8. So my eligible payments are my 68 and my 22, so that's what I spent, times the 0.8 quotient. So that's 72,000. So you can see how reduced employee headcount has a huge effect on what you can get forgiven. That little bit of a difference, a 0.8, takes your number down to 72. That's your new max that you can get forgiven because of that quotient. And we're going to test all of these. Line 9, your loan amount was 100,000. And line 10, we're testing against the 60%. So we take, how much did we spend on payroll? 68,000 divided by 0.6, 113. So our percentage is fine, but the problem is here, the FTEs. So under line 11, the maximum amount that we can get forgiven is going to be the 72,000. So that's why all of these bits of information are important. I did 2 more examples just for fun. So let's take a look at these. You received 100,000. Now it's a 24-week period. You only spent 50 on payroll, and you spent 45 on non-payroll costs, but you got back more employees than before. So you had 25 before, you've got 23 during your covered period when you're applying, and so your reduction quotient is a 0.92. So let's take a look. So line 8, we spent $95,000, 50 and 45 on eligible expenses. My reduction quotient is 0.92, so that takes my max to 87.4. Line 9, my loan amount is $100,000. And line 10, I'm testing against my percentage. So I only spent 50 on wages and payroll costs, divided by that 0.6 to test my percentage. Well, that takes me to 83,000. So now in line 11, the lowest number of these three is this 83,333. That's the most I can get forgiven. So take a look at all these numbers. Be careful how you spend it. Be wise. Our final example here is we received $100,000 in loan dollars. We have a 24-week covered period. I spent $80,000 on payroll costs and $25,000 on non-payroll costs. I got all my employees back. I didn't reduce anyone's wages. So line 8 is going to be this 105 times 1. My reduction quotient is 1 because I've got 25 and 25, so no dip there. So my line 8 number is 105,000. My line 9 number is the same. My loan amount was 100,000. Now my line 10, I'm testing this against my percentage. So I spent 80,000 on payroll divided by that 0.6, 133,000. Under this scenario, my loan amount is the max that I can get back forgiven, and it's 100. So you can see how each of these things makes a difference. So be very careful to don't reduce wages, don't reduce headcount. Be careful how you spend it, and you will get it all back or forgiven. So quickly on the document list, this is page 6 of the instructions for the PPP and page 4 of the instructions for the EZ. And this is going to tell you what you need to keep, what you need to turn into your lender, and what kinds of documents of each thing you want to have on hand. And pages 1 and 2 on both are the loan forgiveness calculation form. That is going to get turned in. On the PPP Schedule A for the regular full application, this is page 3. That is going to get turned in. Payroll backup documentation. So this is going to be anything showing the wages paid, commission dollars, anything paid for healthcare premiums, 401k deposits, all of these kinds of things are going to be your payroll documentation backup. Your FTE backup, whether you use the easy form or the regular form, you're going to have to provide backup of how you got to those calculations. Did you count your FTEs properly? Do you have documentation that shows if somebody isn't returning? Any kind of backup documentation and reports for your FTE you will want to have. Any non-payroll backup, so rent payments, lease payments, your utility invoices, those kinds of payments, canceled checks, any of that would be backup that you want to have for your non-payroll. So again, keep in mind, your lender is not supposed to independently verify the data that you turn in. They only check off whether or not you turned in what they asked for. So they don't independently verify all of your reports and documentation. They just say, yes, I got this report, I got this report, I got this form, check, 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 check. That's what your lender will be doing. So do the best you can, provide as much as you can, have it ready. Tell your lender, yes, you have all these documents, and make it as easy as possible. And then finally, keep everything for the next 6 years. And it's 6 years from the date of forgiveness or from the date that your last loan payment is made. So anything that's not forgiven that ends up converted to a loan, once you pay off that loan at the end of the 5-year window, keep everything 6 more years from that point. So 6 years from forgiveness date or the last loan payment date. Phew. So final thoughts. Head count is really important. It will count against how much you can get back. Your wages are important. If you reduce wages more than 25%, it will count against how much you can get back. So think about when you actually apply. Don't apply too early if you have a wage situation or if you didn't get your employee count up yet. Get your employees back, get all the wages spent correctly, and get those numbers up before you apply. It will help you. It will save you and get the most money forgiven. And then finally, do the best you can. Document as much as you can. Keep clear reports and documentation and save it, and just do the best you can. And you should be able to get the most possible loan dollars forgiven under this PPP program. All right, guys, I hope this helps a lot. I know there's going to be questions, so if there's something I didn't get to, let's have it.
Okay, I have about 3 pages of questions, so everybody just bear with me. Well, you have to remember I have spaces too, so. Okay, some of the questions might have already been answered in the presentation. However, I do not want to leave anyone out, so I will get to everyone's questions. Question number 1, on the 3508 easy form under the forgiveness calculation, what exactly does payroll and non-payroll cost mean?
Okay, so
well, payroll would literally be your payroll, and anything that's not payroll related would be non-payroll. I mean,
we're going back.
That.
Yeah. So, yeah, I mean, simple question. And your payroll costs, so this is it, this slide. Either take a screen catch of this, take your phone out, take a snap of this, or we're happy to send everybody this presentation, no worries. But your payroll costs, salary, wages, commissions, tips, any of these things, benefits, vacation pay, sick pay, healthcare premiums, state and local taxes, these are your eligible payroll costs. And your eligible non-payroll costs are interest on mortgages, not the mortgage payment, but the interest on the mortgage, and then rent or lease payments, and utilities. So a utility like your electric bill or your internet bill, those kinds of things, your phone bill, cell phone bills, those kinds of utilities would be included under the non-payroll cost. You cannot put things like a Netflix account or some specific program as a non-payroll cost, but the actual internet cost can be considered a non-payroll cost. So this is pretty much the breakdown right there. All right, Cindy, what else?
Okay, I was told that you couldn't hear me. That's the first, Tim. I've never been told that before. Okay,
I heard you.
Question. Okay, and the second question, is the extension from 8 weeks to 12/31 for everyone or just new loans?
It's for everyone. And so it is for everyone. And if you got your loan before June 5th, you can choose. So you can choose to still do it in the 8 week, use 8 weeks as your covered period as opposed to 24. But if you got your loan after June 5th, then it's a 24 for everyone after that point. Before that point, you can choose to use 8 or 24. Good one.
Okay, next question. I shifted my monthly payroll cycle by prorating to accommodate exactly 8 weeks. Do I need to unwind that?
No, you don't need to unwind it, because if you already did that and you shifted your payroll to match that, you're good to go. There's no reason to do that. And kind of the logic behind the 24-week window is that now you have so much time in there, then it's going to account for those beginning and ending time periods, but you'll be fine. You don't need to reverse it.
Okay, can you use the money you spent on attorneys dealing with this and CPA fees to review forms? That will...
No, this one's pretty simple, and it was, It was a question that we got quite a bit. Can you list payroll services fees or accountant fees or legal fees? You cannot put any fees in there. It is only the hard dollars. So the actual wages and the actual healthcare premiums, your interest payments, your lease payments. So it's only actual payments, not services and fees connected to making those.
Okay, next question. Give me 1 second. Folks, if you could wait to the end to put your email addresses in, I will ask for those and collect them all at one time. I appreciate that. It's just easier for me to keep it organized and make sure everyone gets what they need. Okay, our loan was funded on 5/7, and we have a biweekly payroll. We plan on using the alternative pay period and the 24-week period. So will that 24-week period begin on the first day of the next pay period or of the alternate pay period? That's a mouthful. Did you understand it, Rachel?
I think so. So the alternate pay cycle is for 8 weeks. So if you are going to follow the 8-week process, you can use an alternative pay, alternative covered period. So the 8-week window is so tightly constrained that they're saying you can use an alternative period to shift to the first day of the pay cycle following your loan disbursement. So meaning that if my pay cycle starts on a Saturday, but I received my first disbursement on the Wednesday before that, I can shift my alternative covered period to begin on that first day of my next pay cycle on Saturday. But in the 24-week window, it's such a long period of time that you don't need to shift it. Just do your wages within that time period. And your disbursement date just start on the next payroll cycle. So you don't need to do that because you have so much time to spread it out. And here's something else I want to say that is important to understand when you talk about the wages. Just because you're in a 24-week period now doesn't mean I can take the money and spread it out 24 weeks. I still have to pay the full wages to an individual. Remember that. So when we talk about reducing wages, you can't reduce somebody's wages now. You got $5,000 for an individual person. You can't spread that out 24 weeks. Their wages are still based on that monthly average number. So the expectation is you're paying full wages for somebody. So if you are paying properly, or if you're paying your employees properly without reducing the wage number, you're going to spend the wage dollars way before the end of that 24 weeks is up. And so that's why the pay cycle doesn't need to shift. When you're in that 24-week pay period, just get started with your loan dollars on the next pay cycle within that.
Okay, next question. What about the retirement benefits for owners?
So the retirement benefits for owners, we have to be careful about. You can, because you have that cap. So be careful about the retirement benefits for owners and look at the other individual pieces and get to your max with other wages.
Okay, Rachel, just so you know, I've lost my Zoom capability, so I'm flying off the rest of the questions I have. I cannot see anything new at this time. I'm trying to get back in.
Okay.
Anyway, the next question is, which W-2 box counts as 2019 wages, owner / employee? Box 3 doesn't include healthcare premiums. Can you just go over what those boxes are, Rachel?
I'm not sure. I didn't follow that question.
It says which W-2 box counts as 2019 wages. So on the W-2, which box counts for the wages for 2019?
I'm not sure. I'm not sure about the W-2 boxes on that.
Okay, and I believe that this is along the same lines. It says box 3 doesn't include the health care premiums. So I believe the question is what information is relevant
Okay.
off the W-2 to translate into the forms for this.
Okay. Okay. So they're using this person is using their W-2 to factor in the calculations for wages.
I take the question,
So,
yes.
yeah. So what I would say is whatever information you use to get the loan in the first place, use the same information and match your information from your loan application for your forgiveness application when you're doing those calculations. So think about how you applied for the loan and how you counted those dollars, and do the same thing on this side. And the other thing is you can use your payroll reports. You don't necessarily have to use W-2 reports for comparisons, but it doesn't make sense to use the W-2 because you have a shortened period. When you're making the comparisons, you're using the eligible time period is either the first 2 months, January and February of this year, or it's the equivalent window of 2019. So your W-2 is not going to help you with this form. Did I lose you, Cindy?
I'm back. What
Okay.
if they spend more? Sorry. What if they spend more than 60% on payroll?
That's great. If you spend more than 60% on payroll, like look at this example here I have on the screen. So you spent, in this example, the loan amount was $100,000 and you spent $80,000 on payroll. Well, you can see it's way over that 60% mark. It just puts you in the clear on this line. So again, you want to look at your FTE quotient and make sure, even though maybe you spent more in payroll dollars, but your employee count was not back up, that will be a problem for you. But if you keep your employees up and you spend a ton of it on wages, you can spend your entire amount on wages, and that will be good for you. That will get you back the maximum. As long as your employee count is up, if you spend more than that 60% on wages, then you're going to get the maximum back.
Okay, next question. We are planning on using the 8 weeks, but if we go within 24 weeks, is it up, quote unquote, up to 24 weeks? In other words, if we exhaust and use all funds from payroll prior to the 24 weeks, say 12 weeks, can we cut it off there and submit for forgiveness?
You can, and I said this in the beginning, you can go ahead and do that whenever you feel like you've used up all the funds, but again, double check all of these pieces. Where is your FTE count and where are your wages? If you have reduced anyone's wages more than that 25% number, they will calculate that difference times 24 weeks. Even if you used up all your dollars at the 16-week mark, but you've reduced wages, then that reduction will be calculated for 24 weeks and then subtracted from what you get forgiven. So be very careful about doing that. If you've spent all of the money on wages appropriately, you've kept all of your FTE counts up, your percentage is high, you have no issues, then you're okay. But be very careful about that first.
Next question. When is the best time to apply for forgiveness?
The best time to apply for forgiveness is when you know you can get the max forgiven. So you've got your employees up, you haven't reduced wages, you've used all the dollars, you've got everything under control. That's when you're ready to go.
Okay, next question. On the 3508 easy form where it says payroll cost, is that my total payroll or my gross payroll amount as we use a payroll company?
I don't know because I'm not looking at your payroll reports, but check with your payroll company and tell them what information you need. Again, CertaPay has some great reports. If you're with us, we're going to provide you with a report that will feed exactly into these numbers for you. But on this number, it's going to be payroll dollars. Your payroll costs are going to be all of your payroll dollars. So something like fees for your payroll provider would not be counted in this number. It's just going to be wages in there. Wages, and then that's state and local taxes, and where's my, let me go back one. And your benefit numbers, your sick pay, vacation pay, any of those dollars that are in payroll costs.
Okay. Can we use the PP fund to pay back employees whose wages were cut off for a short period of time after we received the PPP loan?
Well, you can, if I understand it correctly, can you use the PPP loan for wages? Yes. So it can't be for anything retro. So if you received your funds, let's say you just got your funds this week, you can't pay wages that were earned in a previous pay cycle. So it will only start when you receive it. So you're going to use these dollars to pay wages starting at the date that you get your first disbursement or your alternate covered period, and then going forward. So now what you might do is if you had employees who were not able to work because you were closed or whatnot, and you reinstate them effective the date of disbursement. And then you can pay them wages going forward after that point.
Okay, next question. What does EIDL advance amount mean?
Okay, this is another one of those crazy gray areas. The EIDL is, so you might remember, you might have applied for both loans, that EIDL loan as well as the PPP loan. The EIDL sent out some immediate emergency grants. The max was $10,000. They did it $1,000 per employee with a max of $10,000. That was a grant amount. So they sent out a grant right away to help people as an emergency. And then they processed the EIDL loans. Some people received those loans, some people got denied. If you got the EIDL grant and then got denied, did not have to pay it back. But some people got the EIDL grant, but then got approved for the PPP. So what they're saying is they're going to take that grant and convert it to part of your PPP loan. So now we talk about double dipping. We have a little bit of an issue here. So some people did get a grant, but didn't get the EIDL loan. They did get the PPP loan. So you have to account for that in here. And so let's say you got a $25,000 PPP loan and you've got a $5,000 EIDL grant. You now have $30,000, but the max that can be forgiven is that $25,000. So they're going to have to figure out how to maneuver through this. It happened to a handful of people. May or may not have happened to any of you, I'm not sure, but they will account for this in some way. Either it's going to be subtracted from your forgiveness amount, or that extra $5,000 could potentially get converted to a loan under the PPP at that 1% number due back in the next 5 years. It's a little gray, but they have it on this form because it has to be accounted for in some way. If you got that grant and you got the PPP, there will be some calculating there to figure out how that's going to be accounted for.
Okay, next question. What reports would you use for the FTE count before and after?
Well, CertaPay has created some fantastic reports. They're going to be out probably the beginning of next week, where you will be able to just pull your FTE count and then plug in the dates for your covered period and your eligible period and do the actual calculations. And then you can manually factor in exceptions to that. If you are not a CertaPay client, then I would create an Excel spreadsheet that matches our worksheet. And that is this form right here. So I would create something in Excel that matches this. So you could put in all of your employees And then you're going to count them. Are they a full-time 1, or do they work less hours than 40? You count them as a 0.5. And then get your totals here to match this. I would create one of these for the current, for the covered period that you're using, and I would create a separate one for the eligible period for that window that you're comparing against, either the beginning of this year or the time frame last year, and then use that for your comparison.
Next question. What Certipay reports were created to help us with this?
So we've got 3. We've got this FTE report, and we have a payroll wage report. That is going to be the cash compensation report. And we have a third one that is the wage reduction. So, and again, these are not quite ready, but they're going to be out, I think, the beginning of next week. So you can be really excited about that. We are definitely here to help you with these and make sure we create reports and help you get these filled out. We want you to get the most forgiven, and we're really working hard to make sure we get you the right information to get these documents forgiven. And also be on the lookout for some quick how-to videos that will help you with our reports as well, starring me.
Next. Sorry, I have to laugh. If you have 400 employees, do you have to list every employee?
You do, and that's why creating a report is great for that, because that will be some of your backup. When we talk about the backup documentation and your FTE backup, you want to use reports that are accurate. So yes, with 400 employees, just create a list or run a list that shows in some way. And you can make it easy. Just count, like I said, count everybody as a 1 or a 0.5, or add up all the hours worked, divide by 40. Make it easy on yourself. This doesn't have to be really hard. It doesn't have to be rocket science. It just has to be a 1 or a 0.5, and use the same format for those 400 employees in your covered period and your eligible period. But keep it easy on yourself. You don't have to go super elaborate. Just run a list and have some quick totals, 1 and 0.5, and use that for your FTE backup.
Can you count any part of an annual discretionary 401k match from last year's plan that was paid during the loan period?
That's a little bit of a detailed question. I'm not exactly sure. My gut instinct is no, because it has to be accrued and earned in the period that you're talking about for the covered period. So if that is something that was earned from last year but applied this year, then my thought is that would be a no under the guidelines that we have. It has to have occurred and been earned and accrued in the time period of your covered period. So, but again, that's a little bit of a detail. I'm not 100% sure, so we can either double check on that or do a little bit more digging on 401k and how that's applied.
Next question, it says, just to confirm, as an owner employee of an S corporation, i.e. only employee, can I use the easy form? Yeah,
so this is a great example. You can if, just because you're the only one, you can't automatically use the EZ. So then you want to go to the next 2 questions. Can you say that your wages were not reduced more than 25% and you have the same employee headcount? Then yes. Or can you say this one, you didn't reduce wages more than 25% and you were not able to operate during the covered period? Then yes. So just because this first one doesn't apply, check the other 2 scenarios, and vice versa. This one might not apply to somebody, but this one does, or this one does and not these 2, blah, blah, blah. So if you can say yes to any one of these 3 scenarios, then you can use the easy. You want to prove it. You have to be able to prove it and provide backup.
This next question is great. We do not have mortgage payments. We are a seasonal golf business, and we need to supply housing for our employees who come in from out of state. We rent about 4 or 5 houses for the summer for our employees to live in. Can we use the rent paid for the rental houses against the 40%?
Again, this is a detailed question. Yeah, I'm not sure about that. But those are rent payments that are part of your operating business. So that's a maybe, but I'm not sure.
And is it considered a part of their pay? Is that rent, you know, is there a percentage of their pay a contribution towards that rent? It's a very specific question.
Yeah, that's a very specific question, and reach out to us separately, and I'll help you with those answers. But you can only count that as wages paid if you factor it that way on the employee's W-2. So if it's a perk, then no. If it's accounted for as wages for that employee, then possibly. But again, this is a very specific, detailed question. So let us help you with that offline.
Next question says, I have employees that may work 20 hours one week and 60 hours the next. How do I calculate FTE?
You're going to take the average. So you're going to look at a longer period of time and so this would be an example where you might use the divide by 40 instead of the 1 and the 0.5. So take all of the hours worked and divide by 40, and that will help you with your FTE count. So if you've got, you know, a whole group of employees and they all fluctuate like that, then add up all of the hours, divide by 40, and that will give you your FTE count. The other way to do it is to create an average for that employee and figure out, does that employee work an average of 40 hours or more a week, or do they work an average of 30? And so if they work an average of 30, they're a 0.5. If they work an average of 40 or more, they're a 1. But same thing, you want to use the same calculations and formats for all of the employees in the before, in the during period, and the past period. Don't pick and choose different formats for different employees. You know, pick one format, use it for all of your employees and for both time periods.
Next question, what if you spend more than 100% on the payroll cost?
So if you spend more than 100% on your payroll costs, you're fine. Here's this example in terms of your line 10 question, but you want to go back to your line 8. Do you still have the same number of employees? So even if you spent all of your money on payroll, but you didn't bring back all of your employees, then you're going to have to use the lowest number when you calculate these three. So if you had, let's use this example over here, where let's say instead of 50,000 on wages, you spent 100,000 on wages. So you're way over the 60% number, but you only had 23 employees, not 25. And so your reduction quotient is 0.92. It doesn't matter that you spent 100,000 on wages because you didn't bring everybody back. The maximum you can get forgiven is this 87.4 number because you didn't have everyone back. So all of these pieces work together. So it's important to do each one.
Okay, Rachel, this is where I come into having an issue. Somewhere around 12:20 was the last chat I have. I cannot get back in. I am locked out due to it being active. I have no more questions. I have no more emails. I can see nothing. So I either need somebody else on the team to jump into the chat box and start reading questions from 12:20 forward, or you're going to need to do it because I can't see them.
Okay, so I'm in there. I've got us at the 12:20. Let's see. We had, what if I pay someone on the 1099? So your 1099s don't count under your wages. Your 1099 employees are basically paying a vendor. So that's a little bit different. Store is closed, open back up in August. I got my loan third week. Oh, we answered that one, right? Can I start the first week of August? My store is closed and will open back up in August. I got my loan in third week of April. Can I start my first week in August when we open up? Yeah. So you just start as soon as you open, and you're in a full 24-week period. So your 24 weeks started when you got your funds the third week of April. And so you're counting forward from there. But now you just opened in August, so you need to spend your money because you've got April, May, June, July, August, September, October, you're going to run out of your window. And that was the point of the 24-week extension, exactly for this reason, because some people were not open. And so what you want to do, as soon as you open in August, zoom, take your employee count up as high as you can, return those wages to where they were, pay everybody in that format using your loan dollars, and then you will have used it all before the end of your 24-week window. And that's exactly why because this is a great example. This is exactly why they extended it, because if this person was held to the 8-week window, they would not have been open and out of time. And so they would have spent none of their loan dollars appropriately because their 8 weeks ran out before they could open back up. So that is a great example. On the employee count, if I hire someone back within 8-week cycle and they only worked 6 weeks, can I count them as an employee? So the way the count works is you're doing the count when, of course, during the covered period as a whole or before you do the application. So you can do the employee count as late as December if you want, when you do your application and say, I've returned everybody to this level before the end of the year. And if somebody leaves and you replace them, they can still count as one. If somebody leaves and doesn't return, then that's an empty spot. But if you had to terminate them because of egregious behavior or because of some situation, then you could use that as an FTE exception. So there are certain situations where you can still count that employee. If you replace the employee, certainly there's still just a one. It's not two separate people because you had one and they left and you have another one, so now you have two. No, that would be the same individual. And so again, you're looking at a bigger picture. You want to take the average number. Let's see. If the cover period is 8 weeks, and that is the time frame that payroll costs and headcount are reported on the loan forgiveness, how does waiting until 12/20 to get headcount up? Can you explain further? So if your headcount is up already, you can apply. There's no issue. If you were not able to add everyone back, would be a reason to wait. So even if your 8-week period is up, you still don't have to make any payments. It's not a loan yet. It might still get forgiven, but you don't even have to apply. You have 10 more weeks after the end of your covered period before you can apply. And so if you apply early and your head count is not up, then you have to account for that. It will, you have to put that in your FTE reduction. Add that quotient in. But if you wait and you're adding people back in, even though you spent your loan dollars already, you're getting that employee headcount up, you're getting people in and back in, then apply when your FTE quotient is 1. You've got everybody back or more. If you have more people back, it's still a 1 in that line 13 number. And then you won't have a reduction. Let's see. Okay, if using the 24-week period, are you calculating your payroll costs based on the amount you used before running out of loan dollars, or do you use 24 weeks of payroll costs? You can use within your 24-week period, use all the payroll dollars you want. And because you had other money in there beside your loan dollars, so you just write your total spent on wages. If your loan amount was $100,000 and in the course of 24 weeks, you probably used way more than that in wages. If you had everybody back and you were paying everybody at the same level, you probably spent $300,000 in wages during that window. Use that. There's nothing that says you can't do that. That will at least blow the doors off the percentage and make sure that, that line is going to be the highest number. Then provided your FTE quotient is at least a 1, then you'll get the maximum back. Are bonuses allowed to be in the salary amount? Yes. Bonuses, tips, commission, anything that you pay in wages can be counted in the salary number as an eligible payroll cost. Okay, that one we got. Everybody wants a presentation, so we have a lot of
if you can just, when you get to that portion, Rachel, if you literally just copy and paste the entire chat box where the emails start coming in, I'll clean it up and take out the time and the name and just maintain the email. So literally just cut and paste from when the email
definitely.
Thank you.
Let's just stay on after, and we'll take care of that once we get everybody, once we finish.
I can't see it, so I need you to do it for me.
Okay, just stay on me. Okay. Okay, do you have to use the simplified FTE 1 or 0.5? I thought it was your choice. Example. It is your choice, and you can add it up in some different ways. If you add all the hours, divide by 40, or count everybody as a 1 or a 0.5, choose the format that works in your favor. Whichever one gets you a 1 or higher, or as close to 1 as possible, that's the format you want to use. So if you need to test it out in a few different ways and get the highest quotient, then do that. In fact, the CertiPay report gives 4 different methods, and then you pick the one that gives you the highest quotient. So we definitely have your back on that, and you want to make sure you have the highest number available in that. So pick the format that works best for you. That's it's a really good, important point because of how important that is. Okay, if the covered period is 8 weeks and the time frame that payroll costs and headcount are reported in the loan forgiveness form, okay. Oh, okay. So, okay, so this one, I was trying to figure out what the question was. So they're trying to say if you're going by the 8-week covered period and your time frame is April 20th to June 14th, how does waiting until December to apply help you? Well, it helps you if at the end of your 8 weeks you did not have your head count up. You can wait. You can add the head count back up over the next couple of months. If you apply at the end of December and you have returned your head count up, then you can say our head count is returned, and that works in your favor. Can resignations during the reference period of January to February be listed as exceptions to reduce the FTE reference? No, because the FTE, the safe harbor, and the exceptions have to do with the covered period. So when those periods are what you're weighing against. So if somebody resigned in that period, they're not there. So you're using the numbers that you had there in that eligible period, and you're weighing against the covered period. So the safe harbor and the exceptions really only refer to the covered period, or the period, your 8 weeks or your 24 weeks. Can you use admin fees from your PEO provider in your weekly payroll total? No, you cannot. It is only payroll dollars, wages, commissions, tips, bonuses, payroll dollars, not fees. Emails, emails, emails. Yes, we're going to send you. I think I'm about there, Cindy. Here's one. Should wages more than 100,000 be excluded from payroll costs? No, you're not excluding your $100,000 people. You're only excluding the dollars above that. So maybe that was the question. Yes, wages above 100,000 are not included in your wage number, but but you're still counting that person and the wages paid to that person. And so here's a quick note. The wages are capped at that 15,000 number. It's 15,385. So that's the maximum. If somebody earned more than 100,000 in 2019 and you're paying that same person wages in 2020 during your covered period, the most you can account for that individual's wages is that 15,000 number for 8 weeks. But if you are using the 24-week window, then that ends up being a $24,000 number or a $46,000 number. It's that individual's wages times 3, because we're 24 is our times 3 number, unless it's an owner. The owner's wages are capped at $20,000. It's $20,833. That's the cap, and it's based on 2.5 months of wages for that individual. So I don't know if I just confused things or clarified, but you cannot use wages in excess of 100,000 when you're calculating. An individual's cap is at that 15,000 for 8 weeks and the 46,000 for the 24 weeks, unless it's an owner. Theirs is the 20,000 and change number. And we can get you some more clarification on that if we need to. And I think that does it. If you had any questions that we didn't get to, or if you wanted to receive a copy of the presentation and the slides, put your email in the chat box and I will make a copy of this and save it for everybody. And again, I know this is a crazy topic and it changes day to day. This is as much as we know right now. And keep your eyes out for the awesome CertaPay reports that are coming. And we look forward to working with you. CertaPay is here for you, especially during these challenges and these exciting times. We look forward to working with all of you and helping everyone get through this with ease. So thanks again for joining us today, and we look forward to hearing from you in our future coffee chats every Thursday at 11:30, exciting topics. CertaPay thanks you. Have a great day.